What's going to happen to Gen X? Because they're the sandwich right now. They're the spread.
Well, they're causing the slowdown, but they kind of benefit because when asset prices go down eventually, which they aren't yet, when they do finally crash, they're going to be able to invest at more reasonable prices again and be able to invest for retirement. I tell you, anybody right now in the markets, whether it be bond markets at the lowest interest rates ever, long-term, or stock markets, the highest valuation, if you invest today, even with no predictions of up and down economy, you're likely to make a couple % a year for the rest of your life. You're not going to be able to retire profitably until the markets come down to reality and you can invest at fair asset prices again. This is a new trend everywhere. It's a good trend. People don't have to spend an hour or two commuting every day and sitting in the car. It's only more productive, okay? It's just that the millennials are causing, with less spending than the baby boomers who already peaked at age 46 to 47 before them, they're causing a slowdown. And instead of governments helping to restructure debt, we've got tons of bad debt now from the great boom from 83 to 2007 that needs to be restructured. They're encouraging people to keep that bad debt in place and not to reinvest in new industries and stuff. They're doing all the wrong things because they don't want to have a recession. You know what recession is to me? Sleep. Try not sleeping for 3 days and not become a crazy person. It's already proven. 3 to 5 days, no sleep, you'll become a crazy person. We have to grow and expand all the innovation of the past, and we have to slow again and restructure and cut out losing companies and losing things and reinvest in the future. And governments are interrupting the free market capitalist system that has made us the richest and the greatest advance since the late 1700s in all of history because they don't want to have a damn recession. Greatest boom in history, and just when it needs to restructure, they screw it up so we can never grow again because we never restructure bad debt.
We got through the problem. A lot of it just mismanagement of debt and printing money to solve problems and all this.
All of this stimulus on top of the greatest demographic boom in history, but which did start to fail. So all the stimulus throws money into the economy. What do governments do with this stimulus? They buy financial assets. They start with bonds, but the more money goes in bonds, it will trickle into higher valuation stocks and real estate because that's where the returns are. So what we have now, and I got a number on this, it's close to $600 trillion in financial assets globally. That's about 7 times global GDP at 95 trillion. And normally financial assets are a premium 2, maybe 3 times. So the biggest bubble in the world is all financial assets, even bonds. And when you have a crash like this, when these financial assets start to crumble, the money has to go somewhere. It goes into the safest areas. So it is the income producing real estate, multifamily mostly, and it is the treasury bonds, the highest quality government bonds. If the US government can print enough money to keep a dumb bubble going, they'll certainly print money to pay their bonds off, their treasury bonds, okay? You don't have to worry about a default on 30 or 10-year treasury bonds. And again, I go back and say, okay, let's look at 2008. When I look at the 2008 crisis, that was like 1929 to 32 coming in, except this time, massive stimulus, which they didn't do back then. So they come out of it, okay? But that's when you see things go down, financial assets go down, flirting with deflation. This time we're going to deflate more because they've tried to pump it up and it's failing anyway. So financial assets keep falling. The money has to go somewhere. So what it goes into the safest bonds and the highest quality real estate, which is the people, again, the people who are renting real estate, multifamily, the people who will need it more than ever, even people who would rather buy, can't buy in a bad market and hard to get loans. Who's the best house in a bad neighborhood? Is Europe in trouble? Yes. Has Japan been in trouble forever? Yes. Okay. U.S. is still the best house in a bad neighborhood. And our bonds went up in 2008 crisis, 45%. Treasury bonds, 30-year treasury bonds, and they're going to go up more than that at this time. So you go to the safest places. Again, where can you get predictable rentals, even in bad times, from real estate? And that's from apartments and multifamily. And where are the best bonds that will be paid no matter what, when all financial assets have to go. Now here's my number, from 600 trillion worldwide they're going to have to come back down to about 250 to 300 trillion. Now, think about this. Globally, 3 times global GDP in 95, $300 trillion, give or take, disappears in financial assets. So as long as you're protected from that in the right real estate and in the right bonds, the highest quality, longest term. If I could buy one thing, it'd be a 30-year treasury bond.
Okay, U.S. government.
U.S., not Tanzania. Right. Not even Europe. Europe has much worse demographics and already been slower than us. U.S. as a developed country is going to come out of this after a damn near short-term depression, the best. And our millennial generation, Europe doesn't have one, by the way, is going to be the best in the developed world. So we come out of this better. Our U.S. Treasury bonds, 30-year Treasury bonds would be my number one right now.
Right. You said something. Why doesn't Europe have a millennial? What happened there?
Because they're older, they've been around longer, they've been richer longer, and people who are rich have fewer kids. Poor people have more kids and rich people have fewer. We should promote rich people having more kids, but the natural propensity, people that have a life say more kids ruins that life, and it's better to have 2 kids and be done. Poor people just keep having kids. When the crash happens, I don't want to hold 30-year treasury bonds at 1% to 2% yields or 0. I want to get back into the best part of the world, and it's not going to be North America anymore. It's going to be better than Europe, but Asia is going to be better than North America and continue to be. There's nothing simpler than demographics than that. We're better than Europe in the developed world, and as things move forward, all the growth is going to be in Asia, East Asia, going towards India, which after I die will be the richest, greatest, largest country in the world.
When interest rates were coming down, the price of bonds were going up or something like that? Why is that?
Because if you locked in say a 5% 30-year treasury bond and yields now move down to 2% because of lower inflation, who's worth more, your 5% 30-year treasury bond or the new 2%? Your 30-year is worth a lot more now. So bonds appreciate when inflation comes down, especially long. It is interesting to study other places that have had, inflation and crashes. I mean, I keep seeing people say this is going to turn into hyperinflation. No, it's not going to take much more inflation. It's already crimping our economy and bonds and stuff, and that's already going to lead to a downturn. I'm telling you, when we see this downturn, I think we're already into it. It's already starting now. Inflation will disappear at 9.1% or 10% if it gets the height, and never appear in the rest of our lifetime. That's a forecast.
Wow.
Never see inflation above a few percent for the rest of all of our lifetimes, even if you're 20 years old today. That's my forecast. Because inflation was the major baby boom, and that caused a huge inflation. And you know what follows huge inflation? The disinflation and the boom that follows from that generation that caused it, and blah, 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 blah. We're not going to ever worry about inflation in the developed world again. Hey, maybe Zimbabwe, maybe Africa, but we will never, high inflation will never be a topic after.
That's fantastic insight. Anyway, one more thing about booms and busts. What Harry's saying about the 30-year is basically you're getting ready to pick up more product whenever it is. So it's the same as us. We don't buy real estate when it's high. We buy it when it's low. The point here is that it's when you buy, not when you sell. And the reason I think a lot of real estate guys are going to get crushed are the flippers, because they still expect the price of real estate to go up. So they're flipping the family home, or they're taking out second mortgages on their home because the so-called the value of the property went up. But real estate is also supply and demand. There's a huge shortfall of real estate in America. Demand is going up. So that's why residential is good as incomes come down. I mean, apartment houses are great because people are backing into apartment houses.
Take this seriously. We've had so many corrections now, and we've had this boom go since 1982 now. And even when it should have gotten a lot worse in the last decade, they propped it up. Be serious. You cannot have something for nothing economics work forever. And the fact that after the $10 trillion in combined fiscal and monetary stimulus in 2 years after COVID, we are already falling in a recession again. If that doesn't tell you something's wrong, you better wake up.